The hard data support for the Eurozone recovery remains thin at this point, and so today's revised number on inflation for August had the potential for interesting reading for investors. Joining me to share how he interprets the euro area recovery story is Patrick Legland. Patrick, we ended last week on a disappointing note in terms of industrial production in the Eurozone. Today's results were flat, so what indication does this give in terms of renewed signs of disinflation versus deflation, would you say?
You know, at this time, inflation is absolutely muted. We have very large output gap on one side. Also, there are early signs of recovery. It's clearly enough to speak about any inflation risk. Then, frankly, it's not really deflation, but it's inflation being muted. I would think that's the main thing.
EU finance ministers are no closer to finding common ground for establishing a European banking union than they were before their last meeting a year ago. One of the biggest sticking points is still the question of who decides which banks to liquidate. The Commission President said we will start banking oversight in the fall of next year. It is an ambitious timetable, but doable. Do you think this is the case?
You know, the main issue for banking union at this stage is asset quality review. So longer that all European banks, particularly in peripherals, mid-sized banks, will not agree to go for a detailed asset quality review, meaning that all the assets are reviewed, taking potential provision, it will be extremely difficult to go for a proper banking union. Then it's step one. After, I would say, regulation and supervision will come. But I would say once regulator will know that banks' balance sheets are clean everywhere, including peripherals, it will be relatively easier, if I may say, to go for banking union.
The risk of a crisis may have dissipated to a certain extent. However, there are still potential stumbling blocks. Are there any particular areas of concern in your opinion?
I would say next might be either the property sector in Spain on one side, and on the other side, political uncertainties in Italy, which are certainly the biggest element to watch carefully for the next few weeks and next few quarters.
European equities markets continued their gains following today's results, with the DAX threatening the 8610 level. Are European equities and bonds still appealing at present, to your mind?
Yes, they are still appealing. We are just at the very beginning of better economic figures on one side. Secondly, you know, corporates still have a lot of potential to raise their return on equity, which is at very low level right now. So if you take all this into account, there are still some good news to come both from the bond and equity market, and rally is just starting.
The euro-dollar peaked at 133.80 but is likely to struggle to top this, with the bulk of any Eurozone positive news behind us and the Larry Summers departure-driven dollar selling dispersed as investors look to the FOMC meeting. But what is your outlook in the longer term for this pair?
You know, we do have a target of 125 euro-dollar. Frankly, there is a risk on this forecast that as ECB maintain a relatively tight balance sheet, as the European economy continues to improve, there is a risk that you remain relatively strong. And frankly, we do not have the kind of rebound which is largely expected in the US dollar.
Patrick, thank you so much for your time and perspective. Well, viewers, that's all from Patrick and myself, but for an overview of this week's potential market movers and shakers, please do click back for our week ahead interview. Goodbye for now.